Hello guys, so in this video we are going to explain how to use optimal trade entry concept. So right away we can see that the optimal trade entry concept uses a Fibonacci tool in order to predict where price will be going. That Fibonacci tool uses exactly these levels, so put this setting on your own Fibonacci tool. So how does this optimal trade entry Fibonacci work? Okay, so when you first see a displacement created or a range, you could also say that, you want to draw out this Fibonacci, and the level that you want to be entering on is the 0.618 level. So right away when a range is created, you draw out this Fibonacci, you see where the 0.618 level is at, and if price comes back down to there, that's your entry, and take profit should, well, your first scaling would be at the last high, of course, and your second scaling would be at the 0.27 level. Your third scaling would be at the 0.62 level, and your fourth scaling would be at the -1 level. Okay, as you can see, it plays out really well. As you can see, it's perfect. As you can see, it works all the time. You just have to be able to recognize if it is a optimal trade entry or something else. So if we have a fair value gap right at those levels, right at the entering levels, that helps a lot. And we know about fair value gaps that we always use not the first fair value gap but the second. You might ask first, what is a fair value gap? Well, let me tell you this. A fair value gap is a candle that has no wicks next to it. It has no bodies of candles next to it. It is just a naked candle, and that is a fair value gap. And of that, here also you could see for yourself that we got more than two of them actually. But always you should not use the first fair value gap, which is this in this case, but the second, which is here, right? That's it. As you can see, it also worked out right here. Let's see if Fibonacci works on this one too. As you can see, optimal trade entry works here also. So right away you could see what I'm saying here. So we create a displacement, and displacement is just a range that did broke through a previous high or low. Okay, so that is a displacement, right? So we have this displacement, and that is your range. It's really important. Optimal trade entry only works on clean ranges. If you have a range that is really choppy, up and down all the time, it's not gonna work on that because it's not clean. It's not clean, okay? So only use optimal trade entry on the clean levels, clean candles. As you can see, there is a lot of fair value gaps, and the reason I'm saying this, and the reason this has power, what I'm saying, is that ranges that are not clear do not have, most of the time, do not have fair value gaps, but the clean ranges do. That's your reason why you should not use choppy ranges to use your optimal trade entry model. Okay, so right here we create a range, a displacement range. We come back down, right, it touches the 0.618 level point perfectly. It's absolutely perfect. I mean, that's, you couldn't be any more right than this. Okay, and your stop loss would be below the one, or below the low. Your first scaling would be right here, which has happened right there. Your second scaling would be right there. Your third scaling would be right there, and your fourth scaling would be here. But you know, this is why we do scaling. This is why we scale the profits, because sometimes it doesn't work out exactly how it is. And I'm not saying it always will go up to the -1 level. That's ridiculous. That's a huge range. That's not going to happen every time. Okay, so you will have your third of your position exited already, and the fourth missed, but you will still exit that fourth portion of the trade in the profits, right? But as you can see, every time that price reaches a level or goes through it, it comes back a little, and that's just proving the power of these levels. Look, goes up, down. That's it. Okay, so a short little summary of the optimal trade entry and what we learned today. Okay, so the first thing you want to look for is a energetic displacement that is now a range. We're talking about this. This is a range, right? This is a range. This is a range, and of course this is a range, right? So we create a range. We come back down. The first moment we see it coming back down, we want to be drawing the Fibonacci, the optimal trade entry Fibonacci on our charts. Okay, so, and we know that we enter on the 0.618 level. Price touches that point perfectly, a fair value gap, which also intensifies the power of the move that you will have after, right? We're talking about this. You can see it. This is a lot of pips right here. I mean, this is money right there. See this? This is a lot, right? So right then there, price touches that level plus fair value gap. That's your entry. Your first scaling would be at the 0 level, or you could also say at the last high. Second scaling will be at the 0.27. Third scaling will be at the 0.62. And your fourth scaling will be at the -1 level. As you can see, I mean, this trade with the optimal trade entry concept worked out absolutely perfect. As you can see, point perfect entry, point perfect exit. I mean, guys, what do you want? I mean, you guys might say that I have the benefit of hindsight, but trust me, guys, I do this live. I do this live. Uh, it's so easy to do. It's just go on your own choice. If you don't believe me, look for yourself and find it. Okay, guys, I hope it was insightful. Hope you have a nice day. See you in the next video.